So now that Luna has started to fade into existence and we're starting to feel a little bit more calm and accept the reality, I thought I would do a top 10 list of things that I have learned with the Luna crash. Firstly, I just want to say if you've been impacted by Luna, I don't know your exact situation, but this is a great learning lesson, I think, to reflect on. And I know some big YouTubers who've also lost a few things. I know Rand from Crypto Banter lost a big chunk of his portfolio, and some other YouTubers and influencers out there. So while I don't agree with everything that all these YouTubers say all the time, I never want to see anyone lose their money. This is going to be a little bit more of a serious video, but I have reflected the last 2 days about things that I learned during the Luna crash. I lost a little bit of money, but not much at all. Thankfully, I was actually okay. But I still reflected because even though I still did lose something, it just hits me that I could have lost everything. And it's a good reminder that no crypto is really safe. Without further ado, here is my 10 things that I have learned during the Luna crash, and I want to share them with you. The first is to understand the economy. Understanding the economy is the most underlying thing of everything. Crypto is fantastic, and of course, we all love crypto, and it's a fun thing to be into. And we do think that there's going to be some really cool technology behind it. But there are some pretty clear indicators that we could have seen that would have predicted a market crash happening. Let's look at the first one. We've got US government bonds going to a very, very high level of above 3%, which didn't really happen until 2018, signaling that a market downturn were to happen. Of course, we've got the NASDAQ getting hit. Look at that nosedive. And you can see how much I love the 50% tool here because you can see we've bounced off it almost perfectly at the moment. It's not to say it can't go lower, it can. But just seeing the NASDAQ start to fall and how it's correlated with Bitcoin and crypto, of course, this would have been a idea to have a look at and say, okay, hang on a minute. We have just broken support severely at this level around that 161 mark. And now we are headed down and we don't know where we're going to get going. Of course, another thing we could have looked at is the S&P, and we could have looked at copper as well, where you can see everything is made from copper. So it's really, really important to understand if copper is going down, that means there's less economic growth happening, less economic activity, signaling a possible problem for crypto. If we look at oil, that's been another hot topic. Oil is a very, very important traded commodity, of course, and seeing the price go up will impact businesses and everyone's lives. These are some of the things that we could have looked at. Of course, we can look at the US dollar index and we can just see how high it is at the moment, going to past its all-time high from March 2020, which was the COVID crash. So all these investors are going into US dollars at the moment because it's the safest thing that they can put their money into at the moment, which signals again to you that crypto is not in a good state at the moment. So everyone calling in for the low is in, the low is in. We don't know at the moment because all signs are pointing to US dollars going up, NASDAQ going down, government bonds stabilizing at the moment, and we'll see what happens again in the future. Of course, we've got gold as well, which surprisingly is getting hit at the moment as well. But as it normally goes, gold is a store of value. So during a recessionary phase, most people flock to US dollars and gold. Silver's gotten hit quite hard, and you have a look at Tether as well, which is so much money into Tether in the crypto market, which means once again, people are going into their US dollars, even the digital version of it in UST. So you can just see Tether has not had this line share market share ever. So you can see just how many people are sitting on US dollars. Secondly, your coin is probably not so special. Everyone wants to think their crypto is the one all and be all. I have been doing YouTube for about 8 months, and every time I call a crypto crap, there'll be some comments that come down below. I don't know what you mean. This crypto is one of a kind. It's doing one thing that crypto has never done before. I hear it all before again. And if you have a look at, say, EOS, this is a crypto that has just been absolutely decimated and butchered. You can see, look at how low this crypto has gone from when it launched on Binance in 2018. You can just see how low it is. It now only got to that level once more in May in a very quick burst and back down past or finding support roughly around the bottom low. Not very good. Litecoin, you can see as well. It's just gone up and it had a good run in the first half of last year, but broke it down and it's only gotten to the all-time high twice since 2017. Very weak. Your crypto could be one of the many that are crap and most of them will not survive. And if Luna is a cautionary tale, it's just to let you know that I always say this, crypto is a technological market. It's going to be the way we look at computers back from the early 2000s and the Pentium days and things like that. There's going to be cryptos that come out 5 years from now, 6 years from now, that just make the ones look like absolute Stone Age material when they launch. So there's always going to be new cryptos. There's going to be new something to FOMO about. Say it's the latest and greatest thing. But just plan conservatively and don't get attached to your crypto because it can burn you. Understand that your money and your emotions going into a crypto will make you believe it's the greatest thing ever. And if you're thinking that, I guarantee you a lot of other retail investors are thinking that as well. Number 3, and I talked about this earlier, is get defensive assets. Defensive assets are a way to reduce your risk, but also reduce your reward. But like I've shown you in the charts at the moment, with US dollars going to basically near all-time highs at the moment, you really want to think about how you can position your crypto portfolio in a defensive way. And of course, by that, I mean Bitcoin and Ethereum, particularly Bitcoin at the moment. And you can just see how many investors are flocking to Bitcoin at the moment. You can see back in May 10th and May 11th, particularly May 11th when we had the huge dump off, we saw BTC dominance start to really rise, and it's been on an uptrend ever since. You can see perfect rejection at the 50% in early March before coming down. Then we had the mini altcoin season, and now you can see just how well this 50% tool works once again, bouncing off the 50% tool perfectly, indicating alts are going to be in a weaker position, but everyone is flocking to Bitcoin. A good chunk of your portfolio, not financial advice, but the way I would approach it, a good chunk of your portfolio, minimum 50% of your portfolio should be in Bitcoin or ETH, or 25% each, or some combination of the two. Minimum 50%, because we are at uncertain times. And I always say this, the crypto market relies on Bitcoin and Ethereum getting to all-time highs. I'll touch on that later, but not every other altcoin needs to get to an all-time high for crypto to move forward. So just make sure you're not just sitting in the back being left behind while Bitcoin and ETH are getting you better returns than your crappy ass altcoin that isn't doing anything. And I'll get to that in a little bit. Number 4, it's never too late to sell. This is a really good example. Let's just have a look at, say, Rune, okay? So Runes are this is just an example. This is nothing against Rune completely. But Rune had a really good leg up. And of course, you would have made a pretty good profit if you did take profit. But let's just say you're looking here and you bought somewhere around $8. And it went up and you didn't want to sell because you thought it was going to get higher for whatever reason. Let's just keep it simple. And then it starts to go down, it starts to put its downturn, and now you're basically at break-even point at around $8. You don't want to sell, you broke even, it will go up. It's just a bit of a downturn. And now you start going down. And, now you're really in trouble because now you're seeing a negative. Okay, how much worse can it get? How much worse can it get? And now you start to get really bad. You've basically lost a lot of money going from where you probably bought it at, like I said, around $8, let's just call it, and where the price is now, which is about a 60% loss. And that's actually not bad by altcoin standard. But what I'm saying is you probably could have sold at a 20% loss, a 30% loss, still picked up Rune cheaper, or just put your losses into Bitcoin and ETH. It's never too late to sell. Solana is probably a really good example as well, where Solana, everyone thought Solana wasn't going to break down. Remember when Solana was pumping and we were sitting at over $250 for one Solana? It was absolutely pumping. And then, of course, we have the head and shoulders play out, and then we get the breakdown. And you're probably thinking, okay, I've bought somewhere here, and okay, now I'm break even. Okay, how much worse can it get? Oh, awesome, we found support. Yep, it's not going to get much worse than this. And then you get the dump off. Really bad. It's never too late to sell your altcoin. Always remember that. Number 5 is always have a stop loss in all of your orders. No matter what any crypto YouTuber says or anything you hear from a friend or whatever, no one is 100% certain. Crypto, along with any other asset class, is a game of probabilities. How sure are you that you're right? How sure are you that you're wrong? And what is your tolerance to get out of the market should you be wrong and the market turns against you? Everyone is going to face losses in crypto, in any asset class. How you manage those risks is really the key here. I want to stress that importance. How you manage those losses is really the key here. So let's have a look at Phantom. I remember Phantom, everyone was talking about buying it around that dollar mark. It showed some really good support around that dollar mark. And of course, so if I was getting into Phantom at that dollar mark, I was thinking about it. I didn't end up doing it. But let's just use it for an example. Let's just say you bought it at the $1 mark where the white line is. Okay, so you've got really important support coming from the 22nd of September. And then basically what I'll do is I'll just plot that up on a weekly and say, okay, we're sitting at $1, for example, in the white line. Okay, my next area of support is probably around the 90-cent mark. Okay, so for me, I'd say, okay, I'm going to go around that 90-cent mark. That's a 10% loss, because after that, you're probably headed pretty hard far down. So I would say, okay, maybe for your ability, you might have a higher risk tolerance. But the idea is you have some stop loss. Even if you have a 30% stop loss, you still would have been better off than where it is at the moment, sitting at 30 cents. Always have a stop loss for your altcoins, because maybe you're asleep one day and something's happening while you're sleeping and you wake up, you're like, what the hell happened to my portfolio? It just dipped against me 40%. Always have stop losses in all of your cryptos, because you never know what's going to happen. The only cryptos I wouldn't put stop losses on is Bitcoin and ETH. Unless you really don't care about losing everything, then don't have a stop loss. But again, it's not financial advice, it's just a guide. Number 6 is a little bit more budgeting, and that is always have an emergency fund ready to go. I know it's so tempting because you've got this money sitting there and you want to grow it, But having a emergency fund is the most important thing. Because as we're seeing with Luna, some people lost their house, some people are really, they've lost everything, and it's very tragic to see. But should anything ever happen to you, you lost your job, your crypto went down, whatever happened, at least you have your rent paid for, your mortgage paid for. At least you can get by while you rebuild and decide what you want to do with your life. The last thing you want is to say to yourself, how the hell am I going to pay my bills or my rent or my mortgage because I just lost everything? That is complete utter demise, and you never want to be in that situation. Number 7 is risk to reward ratio. Always understand this. Risk to reward ratio is a really, really important thing, and I think a lot of people don't understand what that exactly means. For example, I gave you 100,000 American dollars, for example, and I told you can only put it on one coin, but you cannot touch it for 10 years. After 10 years, you can take whatever profits are left over after that. You can only pick one coin. What would it be? I'm hoping most of you would say Bitcoin or Ethereum. That's risk management. If you said Cardano or some other altcoin, it's probably not really the right answer. You have to think from this in a risk perspective and point of view, which is that all the smart money agree on one another that Bitcoin and Ethereum is actually a safer asset than the rest of these altcoins. They've been around, they've proven themselves. Let's have a look at AVAX on the weekly because I really love AVAX. But you can see even AVAX, even though it looks so resilient, gone from September last year, holding up really well at these important levels at $50, has now broken down, sitting at around $30. And I love AVAX. I sold my AVAX, I put everything into Ethereum. But what I'm trying to say is that something can look so good on a chart, but you don't want to put a large chunk of your portfolio in there. That's what Rand did. Rand from Crypto Banter, I have nothing against him. He said in one of his videos when I was looking at the Luna updates and just getting information because I really wanted to hear how this impacted people, he said he lost 90% of his portfolio because it was all on the Luna and the Luna ecosystem. That is way, way, way too exposed on an altcoin that was only there for about 7 months. So let's have a look at UST against its USD on Coinbase. And you can see it came out around August. So Luna was around for this is on the monthly chart, 1, 2, 3, 4, 5, 6, 7, 8, 9 months. So a protocol that was out for 9 months, you invested 90% of your capital, or your 90% of your portfolio is allocated. That is not good risk management, and that's how you get burnt. Now, it's unlikely, I understand, but that's just not diversifying enough and understanding your risk to reward ratio. 50% of your portfolio should be into Bitcoin and ETH, then put the other 40% into your Luna ecosystem or something. That way, if anything happens against you, you've played defensive and you put into good assets. Understand it. If you've got 30 grand, it's getting 10% of 30 grand on Bitcoin or ETH. That's 3 grand rather than just putting $2,000 and getting a 50% return. Do you know what I mean? So understand your risk, understand your reward, understand your position sizing, how much to be defensive. And it's very, very easy to do. Just go by gut feeling and go by your income. If you've got a high income, you're probably willing to be a little bit more risky because you can easily replenish that money. If you're very poor or you don't have much funds, you probably want to play a little bit more conservative because should you lose those funds, it's going to take you months, maybe even years to recoup. So always pay attention to that in the back of your mind about how quick can I jump back on should I lose my funds? How quick can I replenish them? Next one is diversify. Not just diversify in crypto. Crypto is a fantastic asset. But of course, crypto is always going to have its volatility. I don't think crypto is ever, never going to have its volatility. It's a very, very young asset. There's a lot of young people in it too. And you really want to diversify. And if you get enough profits, you really want to start thinking about playing it a little bit more safe in other things. Of course, the one major one is property. While I'm not a big fan of property myself, it would be very, very nice to secure an investment property and just diversify that way again, so that if something went down, at least I've got a rental yield. I've got other places coming and giving me income sources should I get hit. It's just another way to replenish those funds I was talking about earlier. Number 9, be careful about investing into layer 2s or any specific ecosystem. This goes for any ecosystem except for maybe Ethereum, but every other ecosystem, be very, very careful, including a little bit of Ethereum, but especially all the other ones. This is because all the other layer 2s that are on the other ecosystems, while they are very small market cap, anything can happen to them. Let's look at Serum. I've got here an example. This is one of the ones that did burn me last year because I just bought it at a really high price. And I was one of those people who just held on until I had pretty much almost nothing left before selling it and going into Ethereum. So again, we had the massive pump in early first half of last year. Then of course we had an even all-time high in the 6th of September before ultimately coming down. And I bought around here. That was the time I bought, and it just kept going against me, and it never did happen. It never really went up from what I was hoping. I had a bit of a time when it went up, but I sold long before that. And even with me selling, it went down even further and continued to get crushed. This isn't just the story with Serum. This is the story with pretty much all layer 2s. Even probably arguably the best layer 2 that we currently have in the market. I mean, let me know what you think. But Matic is probably the best layer 2 in the crypto market. And even this is breaking down into the cents. Remember when Matic was $3, guys? It was almost $3. Now it's sitting at 74 cents. And like I said, this is probably the king of the layer 2s. This is the one that really is getting used a lot, and Ethereum needs this. And you can see it just broke its July low, and we'll see where the support comes in. But the next levels are going to be under 50 cents for Matic if it continues this downtrend. No layer 2 is safe, and be very, very careful with investing into ecosystem. Cardano ecosystem hasn't proven itself. Very, very young. Polkadot. Let's have a look at even Polkadot itself. You can even see, and this is the layer 1. If the layer 1 is doing this breakdown, imagine the layer 2s. It's going to get even worse. So just understand that layer 2s are not the time to really be investing in a bear market at all. Period. And then last but not least, everyone knows it. Everyone needs to learn it. But if there's one last takeaway, never ever chase pumps. Do not do it. Here is the ApeCoin on the weekly. Now, maybe ApeCoin gets to $28 again. Maybe it gets to $100 and you're like, could have bought it now. But the idea is we don't know. We have no idea what the data is going to be in this area. We don't know. All we can do is say, look at the pumps. You would have been absolutely wrecked. Here's the pump. Here's the pump. Here's the pump. And it just got decimated after April. And you would have been on a huge loss should you have bought anywhere near this region. You would have already been down anywhere about 70%. And the thing about Ape is that there's not much support coming in. Should we break $5? It's going to the cents, which is very, very risky because there's a lot of cryptos that just fade into the cents and never, ever recoup it back again. The last bonus one, and I alluded to it earlier, which is how about your coin? Your coin doesn't need to get to an all-time high for it to go there. And I'm going to show you the last chart, which is Chainlink. And this can happen to any altcoin. Remember Chainlink, guys? Everyone was talking about how amazing Chainlink is. And here is Chainlink in 26th of, or about May 2021. Got to the all-time high of around $52. And everyone was like, Chainlink's awesome. It's this oracle. And it does have awesome fundamentals. But you can see in the second half of the bull run in November when most other altcoins peaked, Chainlink never got to its all-time high and now it's fading. This can happen to your altcoin. You could have bought at $50, somewhere around that, and it never got to it. And you're just waiting and just hoping that it's going to get there again. And there is no hope coming for you because for it to go back to $50, it basically has to do a 600% return. And that is just going to take, you don't even know if that's ever going to happen. So be very, very careful because your altcoin, this can happen to any altcoin. Where you just get peaks up, does it. And VeChain did the same thing. There's other altcoins that have never gone to its all-time high. ICP is another one as well that I'll leave you with. Look at ICP. Went to, over $2,500 and now it's sitting at $8. So this can happen to you guys. Let this be a reminder for you that no altcoin is safe. Think about position sizing. It's never too late to sell your altcoin. Always have a stop loss and have some defensive assets in your crypto portfolio. Bitcoin and ETH is a must in everyone's portfolio. Minimum 50%, at least in a bear market. When it's a bull market, you can maybe drop it, but at the moment, it should be minimum 50% of your portfolio. For me, it's a 100% of my portfolio at the moment. I'm not investing into alts until I get a confirmation that things have turned around. So I hope this video helped. I know it was a little bit of a longer one, but I really wanted to get this video out there. Let me know in the comment section below if it helped you and if there's anything I can help you with, especially if you're going through some tough times with the whole Luna situation. But until then, everyone, stay safe out there and I will catch you on the next video.